China may be to blame for the impending economic downfall of the United States. That's true, with the second largest economy in the world, China has emerged as a superpower. China is one of the nations that lends the most money to the United States due to its immense economic might. Yes, the US government is indebted to China to the tune of $32 trillion, making it the largest government in the world. But now that China is threatening to sell that debt and demand its money back, the US economy may crash as a result. That's right, this is something that you will never hear about in the news, but I'm going to tell you everything. I'm going to detail how China loans money to the United States in this video, explain why it does so, and discuss how the United States would implode if China stops doing so. To fully comprehend the US debt position, make sure to watch the video through to the finish. Therefore, we must comprehend how US government debt functions in order to comprehend how China may cause the US economy to collapse through its debt. Despite popular belief, the United States government has expenses in addition to earnings, just like people like you and me or any other business. The government's funding sources are straightforward. It levies taxes on both its citizens and American companies. And the government makes use of that money to pay for costs like the wages of public servants, the upkeep of public facilities, the provision of services, and the provision of social benefits. However, the money raised by these taxes is insufficient to pay for all of these costs, which results in the well-known government deficit. As you will see here, the US deficit has existed for more than 2 decades and has worsened in recent years. The latest deficit in 2022 was a record high at nearly $3 trillion. Just to give you an idea, $3 trillion is equivalent to the economies of Mexico, Colombia, Argentina, Peru, Chile and Ecuador combined, all in a single year. The government incurs debt to pay for this shortfall. However, this debt is not held by banks, rather, it is incurred by the government through the issuance of government bonds, which function as future payment commitments. These bonds are essentially a statement of how much the government owes, at what interest, and for how long. At the end of that time frame, the person, business, or government that holds the statement will receive the principal amount borrowed plus interest. Now, believe it or not, investors feel that the US government is so strong that it will never go bankrupt, so treasury bonds are regarded as safe investments. As a result, these bonds are highly sought for and readily available on the financial markets. China is one nation that has a sizable holding in these bonds. Here you will see which countries hold the most US government bonds. In first place is Japan, with over $1 trillion in bonds, and in second place is the government of China, with almost $1 trillion in bonds. But these figures are a bit misleading. For instance, Hong Kong, which is regarded as a different country, is another significant owner of such bonds, with more than $221 billion in bonds. Furthermore, as you might expect, Hong Kong is under the sovereignty of China, hence China is the rightful owner of this debt. The same holds true for all Chinese businesses, financial institutions, and investors. So the debt owed by China to the US is much larger and probably puts it as the largest creditor. This raises the important question of why China would wish to finance the United States and buy these government bonds. There are actually 2 very significant ones. The first is China's large dollar reserves. That's correct, given that China is the world's factory and sells everything from toys to electric automobiles, nearly everything you own has some relation to China. Additionally, the majority of the products sold by Chinese enterprises are shipped to the United States. And as a result, China and the United States now have a massive trade deficit. A trade imbalance occurs when the United States imports more goods from China than it exports to China, or when China sells more goods to the United States than the United States does to China. In this graph you will see how large the deficit has been in the 2000s. As you will see, the deficit has only grown, and in recent years it has reached its highest point. Every time China sells its products to the United States, the Americans pay the Chinese in dollars. Not just Chinese goods sold in the US are affected by this, practically all importers of Chinese goods worldwide make payments in dollars. As a result, the Chinese government and businesses have a lot of money. What the Chinese can do with these dollars is the crucial question in this situation. China can either convert the dollars into yuan or keep the cash in dollars and invest it to generate returns. For two reasons, the first choice is unfavorable to China. The first is that China must import a sizable quantity of natural resources, such as metals and oil, in order to manufacture all of these things. And as you might expect, the Chinese import these products paying in dollars. As a result, it is useless to convert money from dollars to Chinese yuan and back again. The second justification, however, is far more crucial since it would result in a strengthening of the Chinese yuan against the dollar. That's correct. Supply and demand determine the value of currencies. If the Chinese government and businesses converted all those dollars into Chinese yuan, the demand for Chinese yuan would increase and the demand for dollars would decrease. By doing this, the value of the Chinese yuan in relation to the dollar would increase, which would be bad for China since it would increase the dollar cost of the goods that China sells to the US. China benefits from having affordable goods because it needs to be competitive. China does not convert its dollars into Chinese yuan, instead, it keeps them in dollars, as I have already explained. And keeping those monies in bank accounts is plainly not in the Chinese government's best interests. Banks are not impenetrably safe and can fail. If you are enjoying this video and want to be aware of new videos, subscribe to this channel and turn on notifications. Additionally, banks do not offer high savings interest rates. China can therefore purchase US government bonds from the American government. These bonds are in dollars, as I mentioned, and believe it or not, they are regarded as the safest investment in the entire world. Therefore, a government bond is your best bet if you want to invest your money in dollars and in the safest manner possible. Theoretically, the US cannot declare bankruptcy if its debt is in US dollars. Simply put, they print more money. The United States is also the world's superpower and has the biggest economies and financial systems in the world. Government bonds are therefore thought of as the safest investment in the world, as well as the most liquid, as it is quite simple to sell such bonds on the market. They must pay you interest on your loan if you own a US government bond, as I previously outlined. The interest rate is currently between 3 and 4%, which is why the Chinese are using their dollars to purchase government bonds. In other words, people would rather purchase the investment that is supposedly the safest and most liquid in the world while earning a 3 to 4% interest rate. But let's go back to the beginning of this video and discuss the serious risk that China, by dumping American debt, could bring about the collapse of the United States. We now know why China is one of America's biggest debtors, but there is one crucial fact that we must not overlook. The Chinese have started to sell US debt in recent years. Here in this chart you will see how much money the US owes the Chinese government through its government bonds. As you will see, in recent years this amount has dropped dramatically, reaching a record low of almost $900 billion. And this is the big threat that is putting the US economy at risk. If the Chinese were to sell such debt in the form of government bonds, it would create chaos in the financial markets. First, due to the excess supply of dollars, the value of the dollar would immediately decline in comparison to all other currencies. In other words, since the bonds are priced in dollars, when China sells them, there are too many of those dollars on the market. When there are too many dollars available, the dollar depreciates against all other currencies. Additionally, the value of all American stocks, corporate bonds, and other financial instruments would all fall right away. The explanation is that investors would view the selling of US debt as a sign of diminished faith in the US government and economy. Other investors would panic if they lost faith in the United States and turn to gold, other natural resources, the euro, and the Chinese yuan as safe havens. However, the impact on interest rates would be the most negative from such a debt sale. That's correct. If the United States sold all of the debt it owes to China, the interest rates on all of the country's debt would increase. From the mortgage interest to the interest the government pays on its debt. I'll explain. Supply and demand also affect the interest rates on a debt. For illustration, suppose the United States government publishes a $1 million debt bond with 5% yearly interest that is fully repaid after a year. This means that you, as the bond's owner, will receive your $1 million loan to the government, plus $50,000 in interest, or 5% after a year. Now suppose that 6 months later you decide that the United States is too hazardous and that you wish to sell this debt to someone else. Since they are taking a chance, the other party will likely pay you less for the debt. So instead of paying you $1 million for the loan, they give you $900,000. This indicates that the interest rates on US debt have increased due to the new investor. The US government does not want this to happen because if they issue new debt at the time that all of this occurs, they will have to pay the new higher interest rate of 5.5% versus the previous 5%. If you purchased it for $900,000 and will receive $50,000 at the end of the loan year, this means that the interest on that debt has increased to 5.5%. Returning to the China situation, interest rates would be impacted if China decided to sell its US debt. And having higher interest rates on debt is bad for the government because the American economy is so vulnerable right now and public debt is at previously unheard of historic highs. The former head of the Federal Reserve and current head of the US Treasury, Janet Yellen, has been instructed to put plans in place in case this danger materializes since it is being regarded so seriously. She has publicly stated that selling US debt by China might have disastrous economic repercussions, and she has urged officials to work to mend fences with China. They appear to already be taking this seriously as Secretary of State Anthony Blinken recently traveled to Beijing for the first time in a long time to meet with Xi Jinping in an effort to normalize relations. Even if the conversations were fruitless, the United States is now being compelled to acknowledge China's influence over both the US and the global economy. So this is a perfect storm if we stand back. Already interest rates in the United States are at an all-time high thanks to the Federal Reserve raising central bank interest rates. This interest rate hike is making interest on all debt much more expensive and is putting the economy in a dangerous situation. In other words, we are paying greater interest rates than ever before and are deeper in debt than ever. But to make matters worse, the US government's biggest debtors are the Chinese. The financial markets would become chaotic and the interest rates on the debts would increase even further if they sold such debt. It would not be in America's best interest to cause friction with China since the results may be disastrous. But this begs the question, do you believe that China has it all figured out and is attempting to bankrupt the United States? Or do you believe that China should not put the United States into bankruptcy? Leave us your opinion in the comments and share this video to let everyone know the danger that the United States and therefore the world's finances are in.